Guys, I got some bad news. There are some terrible stocks out there that unfortunately a lot of retail investors are buying. And I honestly don't know why, but I know that's exactly what's happening. And some of the stocks that we're going to discuss today, I honestly have never discussed here on this channel at all. These are the first times we've ever talked about them. So there's a ton to get into, and this honestly is one of the more controversial videos that I do because sometimes these retail favorites are some of you guys' favorites too, and that's okay. We can disagree on stocks, but at least hear me out on these, and of course jump down in the comment section down below and let me know what you think afterwards. And check out the pinned comment down there for my new channel where we don't discuss stocks. We talk about finance, entrepreneurship, building wealth, stuff like that over there. So make sure you check out the pinned comment. All right, so just keep in mind with this video, I'm not judging anybody. We all have bad stock picks. Warren Buffett has them. I obviously have them. Everybody has them that's been investing for any length of time. So there's absolutely no judgment here or anything else like that. I mean, seriously, just click this video right up here if you want to hear about a lot of my mistake stocks that I bought in the past. All right, so let's get into the list here. And I'm sure as we get closer and closer to the end, there's going to be more and more upset people down in the comment section. So I'm looking forward to it, guys. Let's get rolling. So stock number one would be any legacy automaker here in the US. As you guys well know, it's all over the news. It's everywhere. The UAW strike that's going on right now that, not good to begin with, right? And more importantly, sooner or later, it's going to get solved. And no matter how it gets solved, it's not good for legacy auto at all. They're having a hard time just turning a profit, period, much less having those labor costs increase, even if they don't get the 40% that they're looking for, getting just a 20% raise and only working 32 hours instead of the 40 hours. And a lot of other things like that are going to create a lot of headwinds for those legacy automakers that other automakers like Tesla, for example, aren't having to deal with. So that right there is already a huge blow to companies that are already struggling financially. This is kind of the last thing that they need, but this is exactly how it goes. And of course, we know that's going to force a lot of the manufacturing to go eventually, down to Mexico and other places like that, because they just cannot stay on this path and sustain it long term. And then you also have the fact that some of the legacy auto has already lowered their profit, outlooks for the year and lowered their guidance for the year as well. And that right there, of course, is a double whammy in regards to the stock. And now you add on this strike and it's just kind of, wow, that's a lot. But don't worry, there's actually a third strike with these stocks. And that would be just the Fed tightening up rates and basically saying they're going to hold them high for a whole nother year, which always hits, auto industry hard during that time because loan rates are going to be high. And if you're already struggling to sell vehicles to begin with, and then now your customers are having to pay, 6, 7, 5, 6, 7, 8% for a car loan versus they were getting them for 0, 1, and 2% just a few years ago. You're going to see the slowdown as the economy slows down because of those Fed rate hikes, if I could talk. Anyways, the point being, it doesn't look good all the way around. There's really nothing going in the favor of legacy auto right now. So it's absolutely stocks that I would stay completely away from. So stock number two is Virgin Galactic. And this is a stock I haven't talked about in a long, long time on this channel. I know. I actually love the concept, of course, being a sci-fi geek. I'm an 80s kid. I want to go to space, right? Just like everybody else. I want to go to space. But having the desire to go to space and a company being able to create a profitable venture quarter in, quarter out, year over year to actually get people to space is a whole different ballgame altogether, as Virgin Galactic has completely figured out over these past few years. I actually think in terms of a business model, the money is going to be in transatlantic flights, those big hypersonic transatlantic flights that they've talked about trying to do as well. That right there could be a revenue generator in the future, and definitely to me, more of a revenue generator than the space tourism thing that they were going for. But that does not mean that they're on the path to get there right now. And more importantly, that's still an untested market. There's just so many questions here. This is purely speculative. That's all you're doing is speculating on this play. And right now, I don't see a path to profitability, regardless of which direction they choose. They are years away from that, maybe even a decade away from that. So for me, this is a stock, it's pure speculation. And right now, with the type of economy we have, with the Fed stance on everything, it is not the time to be speculating. There might be a trade there somewhere. I have no idea. I'm not a trader, so I don't know. You guys tell me down in the comments. I'm not a trader. So for me, I don't see anything here for a long-term buy and hold investor. So stock number three is Lucid. And I'm sorry, guys, it's got to make the list again. It still continues to be popular. I still get a lot of DMs. I get a lot of messages. I see the comments on my YouTube channel. What about Lucid? What's going on with it? Do you think it's a buy here? Do you think it's a buy there? Just right now, they are struggling and they're just in a niche market that is going to have a very, very hard time over the next year, year and a half in order to get there. And they're, more importantly, they're just not executing. They're having production problems. They're having a lot of issues, not to mention all the other issues that are going to come as the economy slows down. So again, this is not the tight spot that I would want to be in regards to the stock that I hold. It's just hard to sell premium in a down market and a high interest rate environment. That's just kind of a double whammy that really, really hurts Lucid in the short term. And yes, I agree. They have great backing. Their backing is incredible, but a backing has absolutely nothing to do with struggling to scale. They're not struggling to scale because they don't have cash. They're struggling to scale because it's hard. Elon told us that before. It's the hardest thing you can do, and right now they're right in the midst of that struggle. So this is a stock for me, has been a no-go for a long time, and it's going to continue to be a no-go, at least in terms of my portfolio, my plan, and what I think. So stock number 4 would be any recent IPO that is launched. Look, I know we got like a year break from all the IPO mania, and I know it's back again here just a little bit, not a lot. But these things are the most overhyped things in the history of the market. If you don't understand how IPOs work, that is so investors can cash out, and the Wall Street Bank tries to push that valuation as high as possible, make everything basically hype it to the moon, so that way their fee is based upon what they can get right there on IPO day. But I can't think of a single stock. I'm sure that there's one out there, but I can't think of a single one where if you didn't buy the IPO, you missed it. I just don't. Sure, you can go back and look at when Apple IPO'd and then look at it now and go, oh my gosh, just a $100 investment would it be worth, 10 million now, or I don't know what the actual number is, but whatever the number would be, you can see those type things. But how many years did you have to buy at that IPO price or lower than the IPO price after it launched? That's the real question. It's not one of these deals to where all of a sudden it launches, it doubles up this year, and then it doubles up next year, and then it doubles up next year, and it just off and away, and you never got your chance. I just can't remember any great stock that started off and IPO'd and did that same exact thing. It's like the same exact cycle repeats itself, but yet people fall for the marketing, they fall for the hype every single time these IPOs are released. So we haven't talked IPOs in a while, but they're finally back. And I'm not saying these companies are bad companies or anything else like that, but IPOs are back. A lot of people are buying into the hype. And man, it doesn't matter. A lot of these companies still aren't profitable yet. They've got a long road to go. It's a tough environment coming up here, but yet here we are trying to guess, do I jump in now if people feeling FOMO about a stock when you have no business feeling FOMO on an IPO, especially in an environment like this? So just basically, for me, IPOs are always kind of a no-touch deal till we give them a few quarters to kind of see how they perform as a public company versus a private company, which is very, very different, and then kind of see what the opportunity is from there. And inevitably, just having that patience to just wait a couple of quarters, generally speaking, the stock is going to be a lot lower than you could have bought it by the time you got a shot at it on IPO day. So for me, I just stay away from IPOs altogether until they're much further down the path. And on to the final one, and that would be AMC. I know, just go ahead now, all the AMC apes out there and everybody else, I'm okay with it. Go ahead and blast me down in the comments. I'm good. But just the idea of this stock, you want to talk to me about $3, $4 or so, which I'm not even sure I can consider that fair value now because of all the dilution and some of the other games that they played with the stock in regards to trying to create hype here, create hype there. It's one of the strangest management dynamics I've ever seen. I mean, they were buying gold mines, they're issuing these other ape style share. I don't know. There's just so much confusion. There's so many games being played with this stock, not just at the, hedge fund level, at the retail investor level, at the actual company itself. There's just so many different dynamics working there. And the vast majority of it is based on falsehoods and things that aren't true or things that aren't realistic. And, like $100,000 per share, for example, it's not realistic. There's not enough money in the world to make it $100,000 per share. So I don't know where any of these narratives come from. I don't know why people think it's actually going to happen. And more importantly, that's not investing. That is gambling. That's something else altogether, which is something I choose not to do when it comes down to my actual investing. I'm going to invest for the long term. So for me, AMC is just one of those stocks, man. It's just a whole different category altogether, and it's definitely one that I'm staying away from. And if you want to see my complete watch list with price targets for all the stocks I am looking to buy, and you want to see every buy and sell that I make in real time, you want to take 5 courses for free, you want access to that stock analyzer tool for free, you want to be a part of the best 6, 7, and 8-figure Discord out there, and you want to jump on our live Q&As and ask me any question you want. Ask me questions, in my DMs, in the group there. Just a ton of different educational avenues for you to get into with the group. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.